And thanks for listening to the Adulting is Easy podcast, where we make adulting easier by making money easier. This is your host, Lauren, and I'm joined today by Konstantin Weitz and Chen-Chen Huo. Konstantin grew up in Germany and met his wife during a high school exchange in Alaska. He received a PhD in computer science at the University of Washington. In his 4 years at Google, he saved enough to reach financial independence and work on one of his passions, changing the culture around investing and financial literacy. Konstantin is now the CEO, investment advisor representative, and chief compliance officer of Nexus. When he's not changing the culture around investing, he's spending time with his 4 kids, age 5, 4, 3, and 10 months. Chen-Chen spent almost 30 years in the San Francisco Bay Area, graduating from UC Berkeley. He spent 2 years as a management consultant and then started and sold a restaurant chain aimed specifically at the growing trend of food delivery. Chen-Chen and Konstantin met through their common investor, Y Combinator. He joined the Nexus team because he saw the gravity of the problem that Nexus solves and the beauty and the simplicity of the product. He was fortunate enough to have parents that drilled the value of long-term investing into his brain from an early age. And he's also the owner of a bar in San Francisco. So Nexus is the sponsor of today's episode, and Nexus believes banking should work for you. Chen-Chen, Konstantin, thank you so much for joining me.
Of course. Thank you for having us.
Thanks for having us, Lauren.
Our goal for today is to make adulting easier for listeners by discussing a personal finance topic, since managing money is a big part of adulting. So today, guys, we're going to talk about emergency funds. But first, Konstantin, can you tell us why you're so passionate about personal finance?
Yeah, absolutely. I mean, I started investing, I would say like 10 years ago. And I think before that, I had all my money always just like sitting in a checking account or whatever, right? And one thing why I'm passionate about is just I've seen it work, right? You just get so much more out of your money when you actually make it work, right? Instead of having it just sit there in a bank account. It's also sometimes ups and downs, right? But I think especially if you're like in broadly diversified index funds and so on, it's not so bad. And then secondly, I would also say I'm a bit of a nerd, right? Like if you just look at like the theory and the fundamentals behind investing and how that all works, that is also something that just really excites me. And so, yeah, I think those two things, just having it work for me and also it being kind of beautiful on a theoretical side, are things that excite me about it.
I love that. So we heard in your bio that you're working to change the culture around investing and financial literacy. Why do you think that needs to change?
Well, look, I think one good thing that has happened, I think, in the last couple of years is that more and more people started investing, say, outside of a 401k, right? But I think, unfortunately, often that's still with like Robinhood, where it's all about like, chasing the highest returns or chasing the newest hype, or crypto, or all those sorts of things, right? And what I really think is important is that we focus more on, look, it's not a get-rich-quick scheme, right? But it is a really good way for you to long-term park your money, right? And actually get returns from it. And so I think that is something I'm really passionate about. And that is, what I want to try to push more.
I love that. There are people who find out that I do this podcast, that I have the Adulting is Easy podcast, which is about personal finance, of course. And they say, which stock should I buy? Right. Or should I do options? Right. And I'm like, I wouldn't start there.
Exactly.
So Chen-Chen, turning to you now, what in your opinion is the best way to build wealth?
Great question, Lauren. And again, thanks for having me. And really quickly, just to jump off of Konstantin's previous answer about culture and the culture around investing and financial literacy. And this, I think, ties a little bit into what I think is a really good way to build wealth, is that I think there's a little bit of culture around this idea that investing is, it's intimidating. There's a lot of information that you need to know. There's a lot of barriers that you need to overcome to even begin to think about it. So I think, to answer your question, Lauren, specifically, I think one of the best ways to build wealth from an ease of access, from safety and risk mitigation, is through index funds. And the definition of an index fund is it's something that's tied to the performance of many, not one. So you're not picking individual stocks and sort of at the behest of, just one group that may make or break you. It's a way for you to mitigate risk, where if you believe that the economy and the market as a whole is going to continue to grow, history has shown, and there's been so much proof and so much, really good work that's been done in index funds, that's a really good way to get started. So I think, yeah, I would always recommend and always love to have conversations with people about how to participate in those, just even learning about some of the most basic ones, because I do believe that, maybe 85-90% of the time, just having the bulk of your wealth in an index fund that's growing steadily, that's risk conscious and smart, is good enough for a lot of people to build wealth.
I agree, actually. And even though I am sort of known as this real estate investor and I have a good portion of my portfolio in real estate, my goal with my husband is to be about 50% in index funds, and we're about there. And I think that's very important. I like to have, I mean, it's just another way of diversifying, right? And I would
Absolutely.
not be comfortable if everything was in real estate and therefore leveraged and things like that. So totally agree with you.
Yeah, and what's nice about it too is it's not something that you have to, it's designed not for you to sit in front of a computer and sort of, worry about it day in and day out. You're not day trading, you're not reading, earnings calls, or, trying to keep up on the latest business news to make a trade in before the market does. It's really a set it, sort of rest easy knowing that you're in a good space and you have a good strategy, and then go on with your life, right? Do things that matter to you. If it's working and going to work, that's awesome. If it's going to hang out with friends, that's awesome too. But this isn't something that's supposed to, you know keep your mind occupied for hours out of the day.
I totally agree. I always say I pick my real estate and I'll pick my stocks. I can't imagine doing what I'm putting all this time that I'm doing in real estate. There's no time left for stocks, frankly. And there's study after study where we see that even people who have very high level degrees, who are paid a ton of money to be analysts, to run these different funds, even they don't beat the market in the long run. We see that time and again. So I'm glad you brought that up.
Exactly.
Yeah, I think, Chen-Chen, you made it a little bit sound like index funds are the thing to start out with. I honestly think unless you're like, a super hardcore day trader that has like satellites surveying like, parking lots at Walmart to see how much they're buying or selling, right? I think unless you're at that level of sophistication, you should just put your money in an index fund, right? You don't need a day trade, right? Like you don't, and oftentimes, right, like all these fees, they just add up. So I really think it is the right thing, right? Whether you're starting out or whether you've been doing this for quite a long time, right? I think it's basically the way to go.
Is there anything you should do before you start investing in index funds? Any foundations that you should set?
Yeah, I think having a baseline knowledge or baseline level of knowledge of what index funds are and how they work, I think that also helps a little bit with the intimidation factor, right? There's acronyms, and I think Konstantin's talked about the theory behind investing. It's really solid and it's really cool. So I think Investopedia is a really great resource. Even if you're just spending 5 minutes covering the basics of, okay, this is what an index fund is, this is how it works, right? Like here are the different indices that they're pegged to, the different companies that participate, or bonds and treasuries that participate in these funds. I think having that level of knowledge also just helps mitigate some of the risks and some of the myths, I think, associated with investing. I think commonly we get asked, okay, well, isn't investing risky? Will I lose all my money? And I think being able to understand how these things work, and then also being able to look, very candidly at the historics as well. You can take an index fund and you can see how it's performed over the past decade, 2 decades, 3 decades. And that sometimes is a good indicator of how, what future performance may look like. Or you can take a look at bond and treasury funds and look at their yield numbers online. So I think just doing a little bit of reading into how these things work. A lot of this information is publicly available, and I think it will just help ease a lot of the nerves too, around just getting started and starting to participate in these vehicles.
Yeah. And once you learn, I would say too, it becomes very clear that it's riskier not to invest. especially what we've seen with inflation in the last couple of years, which inflation was in, I think, the back of all of our minds, at least me, I'm in my 30s, the back of all of our minds our whole lives because it was so low. But it only takes a couple of years of that happening until you realize, wow, it's actually risky not to invest.
Yeah,
Konstantin, oh, sorry, go ahead.
Sorry, just a quick note on that is the money that is sitting in your checking account is actively losing value day by day because inflation numbers are real. They're you can see what they are, and as inflation continues to grow, or it continues to be a positive number, that money that's sitting in your checking account loses purchasing power. So you're absolutely right, Lauren. It is riskier not to invest. And one more thing about risks too is also understanding the different risk levels around different funds. There are stock funds that are inherently a bit more riskier because they rely on the performance of the companies that are within these funds. But there are also bond and treasury funds where sort of the core theses behind these funds is you are lending money out to let's say the U.S. government, backed by the full faith and credit of the U.S. government, and you're getting money back with a little bit of return. Those things are inherently a little less riskier. So I think just to talk about risks, like being able to understand, okay, these are the options that are available for me. If I don't want to take on significant amounts of risk, but I still want to see my money grow, knowing what available vehicles are out there, I think has helped a lot of people.
Thank you. And Konstantin, I was wondering if there's anything else that people should do other than educating themselves about index funds before they jump into investing.
Yeah, I think one thing you probably need to do is figure out a little bit what your goals are, right? What are you wanting to do with your money? Is your goal to buy a house in the next year or a car, right? Is your goal to save money for retirement? Do you want to build, a dynasty and pass it down to your kids? Figure out what you want, right? I think that's honestly something I think, is really important as an adult, that you don't just like follow the bandwagon of like, I do what everyone else does, right? But like actually figure out what brings you joy in your life and what you want to do, right?
Absolutely.
And then I think once you know what you want to do, you should figure out how to get there, right? And I think this is honestly the hardest thing about investing. It's choosing kind of the right risk level that you're comfortable with, right? If you have like a super short-term goal, right, and you just want to make sure that doesn't get delayed at all, right, you probably want to invest in something like US Treasuries, right? That's where you lend your money to the government. They're probably going to give it back to you, right? Like the US has not yet defaulted, even though we do get to the brink of it every once in a while. Right, but yeah. So, right, if you want it super safe, if you just need the money in the short term, right, probably do something like that. But again, like probably don't leave it in the checking account, right? Like right now, you're getting like 0% returns still, even though the banks are now making like what, 5% returns, right? They just haven't increased the numbers. At least if you're like with Wells Fargo or some major, American bank. And if you go into something super safe like that, it's maybe around 5% return right now, right? And then, if you have like more medium-term goals, right, where it's like, look, I want in expectation, right, I want to hit this goal faster. I want to make more returns, right? But I also, if the market tanks for a little bit, right, if it goes down by 10, 20% for like a year or two, right, I can also live with that, like, then, maybe go into some medium sort of risk thing. And that's usually like some sort of mix of bonds and stock, say 50-50 or something, depends a little. You can look at how these numbers have performed in the past, right? And then I think if you're really into a long-term goal, like retirement or passing the money down to your children, right? But, I have 4 kids. So for me, that's kind of like an important part of life, making sure they're good, right? I mean, if it's really a long-term 40-year out sort of goal, you really want to like probably want to just have the highest growth on that. Even if it goes up and down in between, right? What you care about is the long-term growth, right? And for that, again, look at how these things have performed in the past, but their stock portfolio like is probably the right thing to do. So I think that's, going back to your question, right? Like, I think that's probably the biggest preparation. Know what you actually want out of life. And then, figure out how to map that to some sort of risk.
That's a very big question to answer. I don't
It
think I know
is.
what I
That's
want
why
out of
investing's
life yet.
hard.
Well, and goals to me are a moving target also. And I think that's important to kind of set your goals. And if you want to do it the cliche way, do it like January 1st. I like to set my goals around my birthday because for me, that's like my new year or whatever. So I set goals for the next year around my birthday. And then that's when I kind of, revisit and reevaluate.
That's
So
really smart because then you don't have all the lines at the gym, right? Like that
exactly.
always happen at the New Year's.
Exactly. There's not that many lines in September. Um, so you mentioned you basically checking accounts getting so little return right now. I have my emergency fund in a high yield savings account, which is getting about 4%. This is being posted in July. We're talking right now in June. So I think we're going to be pretty steady by the time this posts. So I'm getting 4% in my emergency fund, but I wanted to ask you guys about that. And I know you deal with this at Nexus. What should emergency funds look like before people dive headfirst into investing?
Yeah, I'm happy to cover this. So I think there's general rule that 3 to 6 months of liquid cash, so liquid, money that you can access at sort of a drop of a pin, is a good benchmark for an emergency fund. And this is to, as its namesake, to cover things that are unforeseen. And Lauren, I would say, even you having your emergency fund in a high yield savings account that's paying 4%, you are not the norm. You are leaps and bounds ahead of most Americans, and I think that's absolutely fantastic. So,
But even having an emergency fund puts me leaps and bounds against, above what, 50% of Americans?
yeah, absolutely. Because things are expensive, right? If they aren't properly prepared for, so I think 3 to 6 months of runway, as to use a term of, okay, well, if something does happen, right, like, God forbid, lose my main source of income, or need to take care of a partner, or there's something that's disabilitating, I think that's been a good sort of benchmark to allow folks to rebound, recover, and reset. So
And you guys, so you think emergency funds should at least be somewhat invested, even if it's like a high yield savings account. It should not be sitting in my Chase savings account or checking account.
no, because what's happening there is, if what a checking account provides for you is liquidity. You go to an ATM whenever you want, or you use your debit card whenever you want, and you have instant access to your cash. There's still some barriers to that too. I know that some of the major banks will have like the daily withdrawal limits or transaction limits. We can talk about that another time, because I think that's preposterous. It's your money. But what's happening in a checking account is, even though your funds are liquid, they are just not doing anything for you. In fact, the banks are taking that and they're using that to essentially pad their own pockets, right? They are going out and taking advantage of the federal funds rate, which is, over 5% now, and they are investing in themselves, and they are, loaning that out to other folks to earn returns. So if it's just sitting in a checking account, like we covered previously, it's actively losing money. It's actively losing value. So we do think that emergency funds should be invested. And I think the nuance here is what that word invested, like what that investment actually looks like. First off, it should be somewhere where it's liquid, where, if an emergency does happen, you can take it out at a drop of a hat. So a high yield savings account, Lauren, on your end, is a fantastic place to put it, right? You are earning 4%. It is still invested, and it should be in a vehicle that is relatively low risk, because your emergency fund shouldn't be, withstanding 10 to 20% fluctuations if the market does tank. So it should be invested. It should be in a place where it's still earning returns for you. It's your cash, it's your money, should be working hard for you. But I think a little bit of preparation of where, and understanding what risk levels that is. You want something that's low risk. You want something that's still paying you returns, and something somewhere where you can access it whenever you need.
Someone once told me their emergency fund is in Facebook stock.
Oh, I just got the chills.
So you don't like that.
No.
Maybe just jumping in a little bit with the risk thing, right? I think one subtlety here is how much money you have beyond your emergency fund, right? Because one situation I found myself in is where, you know, I was also saving money for my other goals, right? I was saving quite significant amount of money for retirement, and suddenly I had like a pool of emergency fund that was like, you know, multiple fractions larger than what I needed in an emergency, right? And so actually the decision I made was like, look, I can actually get higher returns on that money if I put all of it, right, like in something that's a little more risk, but not like insane risk, right? Like something like a super broadly diversified fund like the S&P 500, right? Like historically has like dropped by 50% or something, right?
Right.
At the most, right? So I felt comfortable being like, okay, I have like 3 or 4 times as much as I need for these couple of months to stay liquid, right? And so I felt comfortable saying, okay, let's put that into something a little more risky, like the S&P 500, right? Because I'm going to get higher returns, and I think even in the downside, I'll have enough.
Right.
That said, you know, don't go super crazy, right? Like Facebook stock, right? Like individual company stock. You know how crazy these can sometimes be, right? So definitely don't do that. Definitely don't do anything that's like hyper risk, right?
Right. I've read that if you have a single income household, or even if you have a two income household, but you're both in the same industry, like let's say you're both in Houston, Texas, and you're both working in oil and gas, or if you have kids, right, there are reasons to have a bigger emergency fund than others, you know, so that would change basically what I'm talking about is that would change what your risk tolerance should be. I wanted to ask too about, I'm a real estate investor. I think we have a lot of real estate investors listening to this. What should their emergency funds be? Is there any difference between someone who's running a small business like that and an individual when it comes to emergency funds?
Yeah, I think the theory is still the same. I think the runway that's required to sort of rebound back from the emergency, I think that stays unchanged. This fund is there to allow you to take care of things that need to be taken care of, without having to worry about a source of income, right? And I'll put my sort of small business owner hat on. Lauren, as we mentioned in the intro, I'm a bar owner here in San Francisco, and every so often we have emergencies. We will have, unfortunately, a pipe will burst, and which has happened before, and we would have to shut down for 1.5 weeks. And if it happens to be during a busy week, that's loss of income, right? So for us, it's thinking through what are some of like the feasible bad case scenarios that could happen and what it would require for us to say, okay, we got this. Let's roll up our sleeves. Let's go to work and let's not worry about the source of income that we're missing, like how long that would take, and setting aside that amount. So for us, it's okay, well, we still want to pay our staff. We still want to make sure that we keep our lease. We can't just, shut the entire place down. We don't want this to tank the business, but we need the ample time to, call the contractors, call the appropriate people to make these repairs. So I think understanding, all right, what does that time frame look like, and doing some of the mental calculus of, or actual paper math of, okay, here's what our expenses are for a week at a time or a month at a time, and okay, this is how much we need to keep if we want to stay afloat if something happens and we can't operate for 6 weeks. So I think understanding what those scenarios look like and what those numbers look like will help determine what that fund amount needs to be.
That's a good point. And thinking about that from the overall personal finance perspective, thinking about where your insurance steps in as well in those situations,
Mm-hmm.
whether you're an individual, let's say you lose your, if we're talking about specifically in this case, losing your income, do you have the short-term and long-term disability insurance? Then your emergency fund for sure needs to get you to when those things kick in. Or in the case of your business, I'm just thinking about me for a week and a half, and depending how bad this pipe bursts, I don't know if you would make an insurance claim for that. But if it's 6 weeks, maybe you would. So kind of knowing what your tolerance there is, and this is just a caveat, I guess. Everything personal finance is personal. It always has to fit into your overall big picture as well.
Totally. And then insurance can be sometimes slow as well, right? Like
Oh yeah, yeah.
if you're, you can have a claim and you can have that claim be out there, and an adjuster may just take days, and sometimes you just need that cash immediately to do what you need to do. So definitely really great point. And yeah, sometimes it's not even worth it, because we know filing paperwork and like answering questions with insurance adjusters isn't how most of us prefer to be spending the majority of our day.
I I can't think of many things that would be lower than that.
Agreed.
So my last question for you guys is, can you just tell us just a little bit about Nexus?
Yeah, Konstantin, I'm gonna punt this over to you first.
Yeah, absolutely. Right. So I think a high level, what motivated us to start Nexus is, right, like in this whole thing, we've talked a lot about like, hey, investing is important. And it's also important to keep your money liquid, right? You need to actually be able to access it in an emergency, or just if you want to spend it on something big, right? And so that's really what Nexus is all about. We have like all the liquidity that you'd expect from a checking account. So, you have a debit card, you can go to the ATM, you have a check, you can write checks and so on. But we also automatically let you invest all of your money, right? And so you get those higher returns, and it's not like a bank where they basically do it for you and then keep all the returns for themselves. And so yeah, that's the high level thing. I mean, honestly, using it myself, right? Like as like the CEO, you obviously have to also eat your own dog food. That's what we used to call this at Google. It's been really great. I mean, one thing that's also been like super annoying before is I used to always have to manually like move money into like my Fidelity account and my Schwab account and so on. And now that just all happens in one place. So yeah, it's been pretty great.
I can add a few of my thoughts here as well. So for me, I think part of, and we talked about this earlier too, of why I joined the team and why I'm so excited about working on this is just this idea that money should be working for people. And I think that's the core of what we do at Nexus is we have built the tool that allows people to keep their cash and their wealth in investments that actually earn returns for them, as opposed to what the status quo is today, right? Which is, your wealth goes into a bank. More often than not, they'll charge you fees. I was looking at the fee rate for a Chase Total checking account, and it's like, well, okay, well, we're going to charge you $12 for the luxury of you giving us your money and us investing and earning returns for ourselves, right? And I think there's been the status quo right now in banking is customers don't know better, or there aren't, they don't know that there are other avenues and vehicles that are better for them, that helps them grow wealth. So I think that's the core of what we do. We have made it ridiculously easy to keep your cash and wealth invested in and earning returns for you, because that's, I think, what money should be working for the person, not for the financial institution.
Love that. So is there anything else you guys want to add before we wrap up?
I think I would just love to just, as parting thoughts, to underscore the importance of investing. And I think and I can give just one anecdote here, which is my parents, hardworking immigrants they are, would always value this idea of growing wealth and building long-term wealth. So on my 18th birthday, they opened me a Roth IRA, and they put $1,000 into it, and they're like, okay, Chen-Chen, here's your 18th birthday present. It's going into Bank of the West in this Roth IRA. We're putting it in this technology fund. Happy birthday. And 18-year-old me was like, okay, whatever. Thanks, mom and dad. This sounds great. And then I completely forgot that this account existed. Fast forward almost 11 years when I joined Nexus, in part, because we're an SEC regulated financial services company, I needed to disclose my investments to Konstantin, our investment representative. So I had to dig up this account information for Konstantin. I literally dragged myself to a Bank of the West branch, had a long conversation with the teller, dug up these credentials of this account that was opened for me 11 years ago, and it had $7,500 in it. And I think it's just like, whoa. I mean, it just showcases the power of compounding interest, especially in an index fund where I don't even remember picking out this index fund. But it's this idea that the market does grow, and investing is simply just participating in this and benefiting from these vehicles that other people are doing so. And I think the last point before I hop off the soapbox is investing doesn't need to be intimidating or gatekept by the wealthy. This is something that I think everyone should participate in, with a little bit of knowledge. Like any amount of wealth or any amount of cash can be invested in starting to see returns. You don't need to be, have come from generational wealth or have made it to learn about investing. I think there's a little bit of stigma there as well. And I think, as part of even just the Adulting is Easy podcast, it's something that everyone should learn about because it benefits everyone that does participate in it. So, all right, I'm off my soapbox.
I love it. Why don't you guys tell everybody how to get in touch with you? And I will put this in the show notes as well.
Yeah, so you can find us on the website. So our website is nexushq.com. We have a Twitter page, that's twitter.com/join-nexushq. We have a TikTok that's at CC from Nexus, and also our Instagram page at CC from Nexus as well. And honestly, we love feedback and we love hearing from our users. And that's one of the benefits of being at an early stage software company is we're constantly building, and we love it when people tell us what to build and what will make their lives easier. So you can reach us at any time. Our contact information and support email is available, and we love hearing from you and listening about how we can better your personal finances and make the tool better for you.
Thank you, guys. And if you all liked this episode, you may also like episode 56, Simple Financial Advice from J Rod. And you can find me on Twitter at Adulting is Easy, YouTube at Adulting is Easy, Instagram at Adulting is Easy Real, or email realadultingiseasy@gmail.com. Thanks again for listening, everybody. Hopefully, me, Chen-Chen, and Konstantin have made adulting a little easier for you.